If you are a mover and a shaker and a person that gets things done and looking to turn your backyard into income by building an ADU, look no further and listen to part 2 of our ADU seminar, where we go into the ins and outs of how to leverage an ADU to make income and generational wealth. Stop what you're doing, click on the video. Have a great day.
Thank you, Dr. Barnes. That was very helpful. Even I learned a lot. Hello, everyone. My name is Jaden. I'm an intern here at Sceptre Mortgage, aka the number 3 roof. That's my nickname. And I want to introduce my father, McCarthy, aka TRtheLoanGuy. And if you listen to Dr. Barnes and my father, then you guys will learn a lot, and you too can also build wealth using ADU strategies.
Thank you, sir. All right. First of all, again, thank you guys for showing up, Dr. Barnes. Thank you for that presentation. It was actually wonderful. All right. So, who am I? T.R. McCarthy. I am the mortgage broker for Sceptre Mortgage. I have over 22 years, over 2 decades in the mortgage arena. I have a little bit of law enforcement background as well. And I just love helping people secure their dreams of home ownership and helping them build investment strategies. Okay. My wife and I, we own roughly 3 businesses now. A quick second here. Sceptre Mortgage is one of them, like I said before, where I am the mortgage broker. Last quarter of last year, we started a seasoning salt company, Sherry Sensational Seasoning. As you can see over here, we got some over here for you. And there. And we also have a entrepreneurial and business training and development company where we talk to adults. But what I love to do is go in and talk to the youth. I go into schools all over the place and we talk to the youth, okay? And we're always teaching the kids about how to use their God-given talents and monetize them and become entrepreneurs, okay? I'm always involved with the kids. If you would like to help with that, it's very expensive. You can go to Buy Me a Cup of Coffee or Buy a Coffee, Terry McCarthy, and we have our series from students to CEOs, and that's what I do as well, okay? Now, let's talk about you. Oh, and also you can go to Sceptre Merch and buy entrepreneur t-shirts for your children if you have any. That also helps support those classes, okay? So I've been doing this for a long time. I'm what you call a unicorn because I started from the ground up over 22 years ago as a processor. I worked my way up to become an underwriter, an underwriting manager. Then I was a training manager, branch manager, loan officer, and then broker. So I'm on both sides of the equation. I know the guidelines. So when I talk to people, when you tell me, the more information you give me, I see in guidelines, I see in numbers. So I help people navigate those particular deals, okay? So how can ADUs help you build wealth for your family? That's what you came to hear. Why ADUs? Why now? If you get an ADU, you can build equity. Okay. How do you build equity? Like Dr. Barnes says, when you start with a square footage, let's say your square footage is 1,200 square feet. Your home is worth $500,000. I just have a client we're working on right now. They're in LA County, and their average square foot price is about $600 per square feet. Okay. So if it's $600 per square feet and they want to build a $500 garage conversion in their backyard, that 500 square feet is now added to your now home. And now you just added $300,000 to the value of your home. It's not going to cost you $300,000 to build that 80, or it shouldn't, okay, for that particular price. So you've added net worth already because now you have added. It solves multi-generational housing issues. How is that possible? Well, if you have a home right now, let's just say, like she said, you have a mother coming to live with you, or you have grown kids that want to leave the house. I understand that. Your kids and family no longer have to fend for themselves, and they don't have to encroach on your space in your home. Okay, so you have a place for them. They can, like Dr. Barnes said, pay rent. Highly recommend you do that because you show that as income on your tax returns. When you want to get more financing in the future for more ADUs, you have that coming in, okay? And on top of that, you can generate rental income. Like she said, if your family decides to leave or you're renting to them, you have now income. So you've increased the value of your home. You've also increased income coming in. So now value, income, and when you're looking to do any other type of lending, you have the funds showing. Just like she said, you want to make sure you're charging them so you can show this on your income. Overview of financing options. We're going to, what are your financing options and do you know them? Most people do not know their financing options, okay? We're going to talk about home equity lines of credit, which are HELOCs. We're going to talk about cash out refinancing, FHA and conventional. We're going to also talk about renovation loans, FHA 203Ks, and home style renovations for the conventional side. And we're going to talk about the dark horse that no one wants to talk about, but this is a very good solution. We just used this not too long ago. It's going to be FHA, home equity conversion. Some people like to call it reverse mortgages, okay? But it's an FHA product. I'm going to show you how to utilize those as well. What is a home equity line of credit or a HELOC? Okay, and is it right for you? It's a second mortgage on your home, and it can be paid off and retaken out multiple times until the repayment plan kicks in, okay? It's like kind of like a credit card. You get your credit card, you can take out, you have a $20,000 credit card, you can take out $10,000, pay it off, keep taking it back out, okay? It is an interest-only payment for the draw period. Usually that draw period is anywhere between the first 5 years to 10 years. Then once the draw period is over, you can no longer take money out. You then have to go into the repayment period. The pros of this is it's flexible, and the fees that you pay to get a HELOC are a lot lower than traditional refinance or cash out, okay? A lot lower. The cons, it's adjustable rate. Your FICO requirements and rates are higher than traditional cash out refinances. And you got to have a lot of equity in your home in order to do that. So let's just say your home is worth, let's say you used to take about 80% of the home value. If you have a lot of equity in your ADU is under that equity amount, you can get it paid. But sometimes it's not. Okay, sometimes your ADU can be more than what you can take out of your home through a HELOC. What is a conventional cash out refinance? You have a Fannie Mae or Freddie Mac program. They have the guidelines. These are the most traditional loans available. You can pull out the available equity out of your home to build an ADU. Quick, easy, let's do that, right? You can access up to 80 and sometimes 90% of the equity in your home, okay, depending on the program, your home's value. It replaces your existing mortgage, so you pay off your first mortgage, and we replace it with the second mortgage now, and that takes your mortgage plus whatever we take out to give you, and that's your new mortgage. The FICO requirements for this starts at 620, depending on the program. It's good for strong credit borrowers with lots of equity to cover the cost of building your ADUs. Okay. Any questions before we move on?
So it essentially changes your interest rate to whatever the interest rate is.
Whatever the new interest rate is at the time. So yes, it depends. Like right now, over the last 3 years, interest rates have gone down. But historically, let's say if you got something back in 2018, you may have got a 3.75 interest rate.
2021, so we're under 3.
You're under 3 at the time. So in that case, I would not recommend doing a cash out if we can get a HELOC, but it depends on your equity. And this is what we run into. A lot of people get it, they got it done in, let's say, 2021. It's not going to be that much equity in the last 3 years. So if you really want to build it, either A, this is not going to work for you neither. You're more likely to have to go with a renovation loan. And we're going to talk about that just shortly, okay? This is a traditional loan. Yeah, so if you have the equity, you can tap into your equity. If you don't have the equity, you're going to go next. Okay, so what is the FHA cash out? It's the same thing as a traditional, but this is a government loan. It's more flexible credit qualifications when you go to FHA. It allows your DTI to be higher than a traditional Fannie Mae, Freddie Mac loan. The FICO requirements can go down to 580 instead of that 620 we just talked about. Debt to income, or DTI, can be a lot higher than conventional loans as well. Okay, so this is just different options you have. And you can access up to 80% of your loan's value on an FHA cash out. And then we're going to go mortgage insurance, or they call it PMI, is required for all FHA loans. And that doesn't go away. I'm going a little bit faster. I know we're running out of time here, but I want to get to those questions and answers. The next one, though, is a 203K renovation. I mean, we get to renovation loans. And this is going to be more than likely for you guys because I don't think you're going to have enough equity if you just refinanced a few years ago. So what is the FHA 203K loan program? It combines your mortgage and your renovation cost into one loan. You have two different types of these loans. You have a 203K standard. This is for larger projects. The max LTV on this can be up to 97.75% of the loan of the home's value after the rebuild cost, okay? The minimum FICO on this loan is 580. It includes repairs and renovations, has to be more than $5,000, but you're gonna build an ADU, it's gonna be more than that. And you must have an FHA consultant to oversee the process. She touched on it just a little bit, but I highly recommend whenever we do these loans, you're going to have one anyway. We're going to assign one to you. And what that means is every time your contractor builds a particular phase, the consultant comes out, makes sure that it's done appropriately, and then they go ahead and sign off on it. Okay, to make sure you're not being taken advantage of, because a lot of people have handed over hundreds of thousands of dollars to a contractor and it never gets built. I had an aunt that did that 30 years ago. The next program that you have, and this is a limited program, is for smaller projects. The LTV maximum is the same, FICO is the same. However, you cannot go over $75,000 in renovation cost. If you're doing a garage conversion, that may be enough. I'm not sure, but it may be enough. If not, you have to go with the standard. It combines your current mortgage with the renovation cost into one loan. So it is refinancing that lower rate you have. But in your case, that's what you would have to do more than likely. And the loan is based off the after bill value. So if your home is worth $500,000 now, but you owe $400 and let's just say $60,000, you can't pull any equity out. This is going to now, you're going to add that extra 500 square foot or 800 square feet. We're going to figure out what's your home going to be worth after that. And that's what we loan on. That's how we can get that extra money to you. And I've done these programs for many, many years. Okay.
So the loan is based on the ability as well.
Yep. The loan's going to be based, whatever you add to the house, the square footage of the house and the bedrooms of the house, that's what we're going to average that appraised value off of. And that's how people get away with, I don't have enough equity in my home to build right now. Okay. Very good loan. Yes, sir.
Last question. Because it's FHA and there's not necessarily their PMI involved in
Absolutely. Absolutely. But some people don't like PMI. I guess this is right here is just a little how we break down how we're going to make we're going to lend on this. You're going to have what your home is worth, what we're paying off. We're going to say what it costs to actually build it. We're going to get that from your contractor. We're going to take a minimum of 10% to give a cushion. We can take more if we need to, but at least 10% for a cushion, because there's nothing worse than at the end of your build, you're saying, hey, you need another $40,000 to get this going, or you need another $10,000. Well, we got the cushion that's already built in, okay? Plus all the different fees, repairs, all the stuff. And what happens with that, let's just say you get everything built and you have a surplus. Well, that surplus goes to pay down the mortgage, the principal balance of the mortgage, okay? It doesn't go in your pocket, it goes to pay down that principal, so your rate goes down. I mean, your monthly payment goes down. Home style renovation, this is a conventional, okay? Again, it combines your mortgage with the cost of your build. 1 to 4 units, you can refinance up to 97% of the home's value after build. On a 1 unit residential, and 75% on investment property. So if you're not living in that property and you want to put an ADU on it, you can. We can only lend on 75% of the value of the after build. Okay.
No. It's because you're not living in it.
Because you're not living there, yeah. It's an investment property. But if it's on the property that you're living in, you can go up to 97%. So if you have a portfolio and you have multiple properties and you want to build on those multiple properties you're not living in, the value we can go up to is 75%. Usually, if there's enough equity and it's going to add to your house, we can do that. We've done it before. However, if you just bought that house and you don't own it, it's not a lot of equity in it, sometimes it can be just a bit tricky. All right. DIY is not permitted. You can't, if you're a contractor, you can't build your own home. You got to get a contractor, licensed contractor. Usually work must be completed in 9 months, but we can move it up to 12 months or even longer than that if need be. But normally they want to see you get started and have it done within about 9 months. Usually they give you to up to, can't go to 15, okay? Again, unused funds will be applied to your principal reduction. Any questions?
So as obviously it combines the two, and I'm still going back to the fighting for 3 years to get rid of my PMI on financial debt. I know at FHA, the only way out of PMI is to refinance out of it. Does that mean that even after you get down below that, 80% mark, let's say you make additional payments?
On an FHA. On an FHA loan, it used to, not anymore. About 5 years ago, they stopped that. FHA requires PMI for the entirety of the loan. You would have to refinance to a conventional loan. This Homestar Renovation is a conventional loan. So let's just say after we build value, you're now at 80% value. Well, you don't have to have that mortgage insurance. But if it's over that 80%, you'll still have it until it hits that 80%. Then you request for it to drop off and it will. Okay? FHA HECM. I'm getting into this because I just had a client, senior client, and on a very fixed income. A lot of equity home. They wanted to actually add a ADU for their kid to live in. It was a daughter. They're small kids. They had just got a divorce, but they didn't have the money to build it. So for her, what we did is this, HECM, for seniors 60 plus and over. This loan works for seniors on a limited income, which she was on. You build an ADU without a monthly mortgage. All you got to do is pay your property tax and insurance, and if you do that, you should qualify. You must maintain the annual property taxes, homeowners insurance, like we just talked about, and the rental income from the ADU can help supplement that particular person's lifestyle. It's good for those with a lot of equity and not enough income to qualify for a traditional mortgage. The reason why we do this, again, a lot of grown people are coming home to live with their parents with kids, okay? Especially after divorces or something happens. And this worked out extremely well for that particular family. And I can't stress how much this helped her out.
After the parents die, the children lose the home.
No, they don't. Who told you that?
And
Oh, no, they do not. They don't lose a home.
how does it reverse back to a original relationship at all?
That's a great question. So I usually tell people the same thing. If the mom had a regular FHA loan or a conventional loan and she passes away, her next kin has roughly 3 months to either sell the home or purchase a home and put it in their name or refinance into their own name if they inherit it, right? They have about 3 months, 90 days before they start foreclosure proceedings. On an FHA, HECM, or a reverse mortgage, you have up to 12 months. So when the mom passes away, they have up to 12 months to either refinance the home in their name, sell the home, and they have 12 months. They have an additional 9 months longer than a traditional loan, especially if they already have a trust, they're inheriting it. All they have to do is either refinance into their name. If they cannot refinance into their name, because I've seen this happen as well. People inherit homes all the time. They got to get, take it over, but their FICO score is like 2, and they can't, so they got to sell the home. But if you can afford the home, refinance it, take it over, you're good to go. That's what has to happen. But they don't just lose it. They have 12 months to do all those things, okay? Which is why I like that program, because it gives them more time. HELOC is best for people who's equity rich. It's flexible because when you take the payment out, you can put it back. You can also use it for whatever you want to use it for. You got to have good to great credit though, because for that, your FICO has to be a lot higher, usually 680 and above. It can go under that, but then you start losing out on the amount that you can take out, okay? It's a variable or ARM. A cash out refinance on an FHA or conventional, you have to have, this is for higher loan needs. The credit varies because it depends on whether it's FHA or conventional. And you can be fixed, not just adjustable, but fixed rate. Renovation loans, 203K or Homestar Renovation. For full builds and upgrades, needs for more funds than a traditional HELOC and a cash out. FICO is mid to high, and again, it's fixed loan. FHA HECM, seniors 62 and over with a lot of equity in their home. The credit varies because you can go down into the 500s easily. Just need some LOEs or some letters stating certain things. And no monthly payment, must just maintain the property taxes and insurance. Okay. So these are the ones that we've used the most when we're doing ADUs. Out of the last probably 10 or so we've done, we utilize one of these methods all the time. It's only a couple of times we use some other stuff, but this is the traditional HELOC, cash out. You don't have a cash out renovation. And for certain clients who are older, we can do the HECM reverse. Yes, sir.
Are these ranked based upon financially which one is more financially beneficial if your situation allows for it?
Every situation is different. And that's one of the things what I love about my job. I can talk about this for hours and hours and hours and keep going in on a very deep, granular level. But I rank them this way. The HELOC is probably the easiest one to get. If you have it, it takes about a week to 2 weeks to get everything done in HELOC, okay? But you gotta have the equity. If you don't have the equity, can't get a HELOC, and you gotta have better credit than these other ones. Cash out refinance, same thing, you gotta have enough equity to do something. Good? Okay. You have to have enough equity, but it just takes everything in one fell swoop. Just get the cash out, you get to control the cash. The renovation style is for people who don't have the equity, okay? And it just makes one simple loan. You don't have to go get another loan and you have another, everything's in one loan. That's the one we use a lot. And then for the HECM, you have to be 62 or older and you gotta have a lot of equity in your home. But if you do that, we can take out your monthly mortgage payment. You can still pay it because it's just so flexible. You can pay it like a regular loan because it's an FHA loan, or you can say, I just want to pay my property taxes and insurance, and they're good to go and they get a better lifestyle. I got two things because I have a client right now that's actually in the process. Right now, we're starting with her financing. She wants to build an ADU. She's going to move into the ADU in the back, and she's going to rent out the main house in LA. She's in LA right now, okay? And that's what she's going to do. The second thing is this, like Sharon just said, you guys have a mortgage already. So let's just say this is what your mortgage is right now. Let's say we do the renovation loan. We say it's going to cost you this much more for the renovation loan. It's your home plus it's the ADU. So let's just say whatever it is, and then but you're going to rent out the ADU. You're already paying whatever it was. It was $2,000, $2,500 doesn't matter, right? But now let's say it goes up to $3,200 a month. You're like, oh man, it went up. Yeah, but it did. But you're going to also now, if it's a 2-bedroom in your backyard, you're going to get at least $2,200. So even if it went up $1,000, you got $2,200 coming in now, okay? So now you're $1,200 over, but now that's also still paying down your actual, what you was coming out of your pocket before. That's what she's talking about. You gotta look at it from a different way, not just, oh, it's gonna cost me this much. Well, you're already paying your mortgage. How much more is it gonna cost you to get that ADU added monthly, and how much you're gonna rent it out for? That's how we look at things, okay? That's how at least I look at things, okay? So what are the documents required in most loans? You need your 30, if you're W-2 working, your 30-day pay stubs, last 2 years W-2s. If you're self-employed, 2 years tax returns, all schedules, 2 months bank statements if you're going to be coming out of pocket for anything. We need to see where the money's coming from. And if you're, again, a business tax returns or 12 months bank statements, okay? We're looking for your credit score. How's your FICO? How's your repayment process? Your debt to income or DTI, what's coming in versus what's going out. The appraised value of the home as is and after complete value of that build. We're going to look at your contractor's information. And this is important because a lot of people have come to us with contractors, and when we start vetting those contractors, they don't have licenses. I start vetting contractors, and they can't give me a basic report on what's going to cost to build that home. What do you mean by that? She talked about that earlier. You'd be surprised. You're like, we can't use you.
I know a contractor who had a company, had a license,
Mm-hmm.
but after he did the work, he found out with his license, he was using a license from the place where he used to work, and they had the same name. And he already had 5 lawsuits against him, so we could.
Oh, we bet that up front because we got to get his license. We got to get all the information. We look into it, and if he can't prove it, it's not him. We got to look at your ADU project detail, and does it make sense, right? Because again, we understand most stuff. You can say, oh, it's going to cost me $50,000 to build an 800 square foot ADU. That's impossible. Okay, and it's going to look at your ability to repay the loan. Basic stuff. Prepare now, get detailed project plan to understand your cost. You want to work with a licensed contractor, we already told you why, okay? And understand why you're building. Know your return on investment. Are you building for family? Are you building for rent? Are you building just to build to say, my neighbor did, I want to do it too? You have to understand your reasons, all right? Here's a couple of success stories, just so you know. This first one's going to be Miss Delia and her mother. Miss Sharon and I did this particular one not too long ago. It's going to be a quick video to show you.
We actually submitted the file on Friday the 14th. On Monday the 17th, we got our first approval. On, I believe, that Friday the 21st, we actually got it clear to close.
Yes.
That following Monday, we got docs out.
Yep.
And that Thursday, which was the 27th, we actually funded your loan. So in less than 2 weeks from submission, we got our approval. We got our clear to close. That includes getting the appraisal back. We really went really fast on this particular file. But within 2 weeks from start to finish, you guys got money in hand.
That's one of our success stories there. We had a walkthrough, and that's just one of many ADUs that we've done, but one of refinances. But that ADU that you saw earlier that Dr. Barnes was talking about. A quick second.
I know that there's something you see in me, 'cause I see the same in you. I know that there's more than meets the eye. 'Cause you light up my
Yeah, so we're here at this fabulous 800 square foot ADU. It's steel frame, it's stucco exterior, recessed lighting, all the modern amenities. But what I was sharing is that a lot of people, a lot of clients, people I talk to, they want to be able to come see, touch, and feel an ADU. The problem with that is the ADUs are built on residential lots. They're built in people's private yards. And so it's very hard to get permission to show, a lot of people an ADU. This one that we're at now is in process. Now, because of construction underway, ladders, different things are not connected, the hazard that could be here is why they wouldn't invite the public to come and inspect this. So that's why with myself, my team, we come out, we're doing the best we can to bring you video footage to help you get a picture of the custom home you can build in your backyard. So as more we can see and the opportunity that we might have in the future to share with you, we'll definitely let you know.
'Cause I see the same in you. I know that there's more than meets the eye. 'Cause you light up my world tonight. So we should be floating to wherever we're going. 'Cause if the sky is an ocean, then we're going slow motion.
What's not much more expensive
Right.
today than it was 10 years ago.
Right.
It's just all the maintenance stuff.
Exactly.
What are we gonna do?
Yeah. How are you handling the septic tanks?
We run a leach line
Okay.
And we drop a new septic down.
Okay.
Usually,
All right, TR the Loan Guy here, looking at this beautiful, beautiful ADU that was just built. It is gorgeous. The pricing is about right. We're looking at it. We're able to finance these things. If you're looking to have an ADU built in your backyard, we can have it done. We can finance you. Give us a call today. Let's find out. Let's work hard. Let's get your dreams reality, okay? TR the Loan Guy, signing out.
That's what I'm missing for the full package. Them have their own private entry and own private like little yard. So that unit will have the square over there. That will be their own yard, and their entry will come from there. That unit will have an opening over here and will have a yard in that area that will be fenced, obviously. And that unit will have all of that area plus the front. The entry to that unit will come from there. The entry to that unit will come from here. And obviously the front unit will come from the front. So it's like 3 little houses, right? Increasing the value, increasing the rental. This thing, we are looking at about $4,500 to $4,700 a month. That's the value of that in this location. This unit will most likely rent for something like $2,200 or something like that, $2,200 to $2,400. It's going to become a 1-bedroom.
Right.
1 bedroom, 1 bath with a yard, so it's going to rent for about $2,200, $2,700.
Great.
So there you
All right, just arrived in North Hollywood. I'm sorry, actually Reseda, I believe it is, in Reseda now, to go look at the second unit of the metal steel frame ADU construction. So we're gonna go find out what it is, look at it, and report back to you. Here I am. Right behind me is the ADU that is already built, and it is a steel frame construction. Great ADU. Look at that thing. It's beautiful. Let's go inside and look at it.
I see the same in you. I know that there's more than meets the eye. 'Cause you light up my world.
Before we get started, I just want to take the opportunity to thank Dr. Sharon Barnes and the ADU Advantage team for inviting me out to go see North Hollywood and Reseda. The ADUs being built, one in production and one already finished, so that I can bring you this content regarding ADUs. I received so many inquiries regarding ADUs specifically that I say this all the time, but you have to have a great team behind you. And when it comes to ADUs, I have a great resource behind me. Dr. Sharon Barnes is an ADU expert, certified, qualified, and educated in real estate and ADUs. So when you come to me, the first thing we're going to do is get you pre-approved for what you qualify for, so that your next step is you know what your budget is. You talk to your ADU team to see, hey, this is my budget. What will this buy me? And they start the process of getting your permits, your plans, and your architectural designs, and then you're off to the races. You cannot start the process without knowing what your budget is and what you can afford. So you have to go ahead and give us a call today. If you are a real estate professional and you are confused about ADU laws, SB 9, ADUs, granny flats, give us a call. You need a team behind you that can not only finance, get the job done in a timely manner, but also walk you through the process so that you are the expert for your clients as well. TR, the loan guy, signing out.
Oh, when we look at this, we can tell that we have been doing this for a while when it comes to financing these ADUs, for one. We have a ton of clients that can vouch for us. We have the receipts to prove that you can build an ADU, whether it's for family or it's just you want to get a rental property without having to go buy another rental property and pay separate taxes and all these other things. You can get this done and you can become a landlord and have just one property and make it so much easier. If you listen to Dr. Barnes, again, the knowledge that she has on ADUs is so good, so big. I'm always leaning on her when it comes to these things, when it comes to the laws, the counties, the cities. I give her a call. So this wraps up my portion of this particular talk. Anybody have any questions on the financing portion of it? Because I'm about to turn it back over to Dr. Barnes. Yes, sir.
So we talked a lot about the kind of the before value and the after build value. How does that calculate? Is it just they take what your square footage is now and then multiply it?
Yeah, so if you go and look at your house right now, again, it's gonna be appraised by an appraisal. So once we actually get the true value, because the appraiser is going to look at your plans, going to look at your property, and they're going to give us the true. But a rough estimate of it is this: how much is your home selling for in your area per square footage? Like I said, over in LA, we're looking at right now is one is selling for 600 square feet, $600 per square feet. So if our home is worth 500,000 right now, if we add an extra 500, we know it's going to be roughly an extra $300,000. So that's the rough, dirty estimate of it. But once the appraiser looks at it, he'll tell us no, it's going to be worth more than that.
So it's based off whatever the value is for now. It's just kind of laid off the side.
Mm-hmm. That's the rough and dirty estimate, but yeah, but you still got to have an appraiser to do it though. Yeah, but yes, that's how it looks. So whatever your square footage is, and once we find out what's the square footage is selling for in your area, we can kind of tell you if you're adding this amount, this is what it would more than likely go up to. Exactly. Dr. Barnes.
Yes. Thank you, TR, for that excellent presentation.
Thank you.
I appreciate everyone for coming out and brazing all this traffic to get here. And I hope that you've had some valuable information. As I say, I will be emailing you my presentation. I will share your email information with TR. He will be communicating to you. And as you see, we're on social media, so please subscribe, keep connected to learn more and to see what we're doing. And I just want to make a couple of comments. When it came to that home that we toured and that you saw in my presentation, that home was located in Reseda. They're renting out for like $3,800. It's kind of what that now in the Inland Empire, just on the location, we could easily get 28. Okay, so it's still more than pays for the loan and gives you a positive cash flow. And that's one thing with the ADUs is that really no matter how you slice it, from an investor standpoint, it will cash flow because you're going to get about 4 times the cost of a note. So just keep that in mind. And unfortunately, when we mentioned the $40,000 grant, that grant came out. Some people have it. I have a client, unfortunately, who received the $40,000 grant. The grant had escrow fees and administrative fees. So out of the 40,000, you only actually had about 33. But then they changed the rules because they didn't have people qualify before they got accepted or on the list. So my client cannot access the remainder of that 33,000 until she can get finance for the entire ADU she's going to build. So she needs the quote, she needs the drawings, and it was supposed to pay for those things, but she has to come up with the like $15,000 to get everything to prove that she can build it. And so everything that looks shiny doesn't pan out all the time. but we're trying to build housing. So thank you so much. Have a great day. Appreciate you.